I think we began a trend a couple of years ago when we started. Some states started raising wages to minimum to $15.
But sometimes that doesn't work, right?
I understand that.
This is organic. This is from the companies themselves more than from. Wouldn't you rather have it this way than legislated?
Than mandated? Yeah. Absolutely. But I do believe the legislation in some states is causing that pressure too, because they're going to have some states that have higher wages than other states, and they're going to have to equalize them. But probably the most important thing I don't think is going to happen, I don't think we're going to see a narrowing in wages. So I believe you're going to have wage pressure, but unfortunately the wage pressure is going to be in the...
Well, you already said, so what you already said about the high end getting...
Highly skilled.
We have labor shortages, and I think those labor shortages are going to continue to raise wages.
If the gap stays the same, but both the skilled go up and the lower go up, is that necessarily a bad thing? You're not unhappy that the skilled people are making more money.
No, it's not a bad thing. If we could all be elevated, that's fine.
Right.
That's what you're insinuating.
But no, I'm not insinuating. I'm just positing the question.
Yes,
because you sort of, I couldn't tell whether you were happy it was.
This is a good outcome. How can you not say this is not a good outcome?
I don't know. I'm like pulling teeth to get it out of you. Okay, all right. So were you for this tax deal?
I'm still unhappy they're related to a few of the components of the tax bill, state tax, but also I think, and for you, Joe. Yeah. The last time I checked,
well, you throw in my agent fees.
I don't know. We're working in New York City. Right. So I think you're.
Do you know about our agent fees?
Let's move on about that. But here are some of the things. Overall, it's a great bill.
As much as state tax.
Let me just say, overall, it's going to do wonderful things, especially for small businesses.
Right. Bringing money back.
Bringing money back to me is not that significant. Areas that I thought they should have done, which I think is almost, I don't want to go say irresponsible, but I would say should have been done, and that was they should have totally eliminated carry interest. Let's be clear. That is an unfair tax advantage.
Agree.
The things that I was kind of annoyed at, there's a surcharge now for income over $1 million for not-for-profit entities. So if you're trying to get the finest leader of a president of a university or a president of a hospital, they're competing with the private sector, and now they are taxing not-for-profits in addition to everyone else's taxes.
Stan Druckenmiller has been upset by this too.
You mean that you can't itemize?
No, it's an actual 5% special surcharge.
For any not-for-profit. So hospital or anybody who's running any of these, they're going to pay a special surcharge on top of that.
But the
charity, and we kept carried interest.
For the most part, though, it's not a lot of money. And
I know.
I know you're talking optics or whatever, in fairness, but. And charities largely escaped any of the draconian methods that were being considered.
Yes.
And the one thing I've seen them complain about is that average people aren't going to, the only reason average people would ever give any money is because they need to itemize it on.
A massive number of charitable donations did happen in the month of December. So we'll see what happens next year if it impacts them.
But overall, it's going to be, as I said earlier, it's going to stimulate the economy. Mm-hmm. It's strong for small and medium businesses. I think it's much stronger for small and medium businesses than large companies. I mean, the one thing that people miss, a tax cut is below the line. So for large companies, they're measured by revenue growth. That's one thing when you talked about BlackRock's quarter, you looked at revenue growth, you look at margins, you look at operating income. That's above the line. So the marketplace is recalibrating. Like for us, it was assumed by our analysts that our new tax rate was going down from 31% at BlackRock, about 25. Well, it's going down to 23. And so the marketplace is rallying because there's a new recalibration. That's a one-time thing. So a lot of this market run-up is a recalibration of how corporate earnings are going to be, and you're going to adjust now the stock price to the new EPS level. Mm-hmm. After that one-time event, now we have to see, does the tax cut stimulate more growth, more demand, and that we'll see that in the revenue line. We'll see that.
It will make American businesses more competitive, though, than where they'd been before, just based on the new.
What it will do is going to make the U.S. more competitive for companies to come back to the United States, for companies to put factories here. One of the big
Like Fiat
problems
Chrysler.
that's going to face Mexico is now the U.S. corporate tax rate is lower than Mexico. And so historically, companies identified as Mexico as their place of where they should be domiciled for tax. You know, because companies have business in the U.S. and Mexico, but they identified Mexico, and now the companies are going to re-identify they are going to pay taxes here in the United States.
Like we've just seen from Fiat Chrysler, which is a really interesting point, them saying that they're going to be relocating to a factory in Michigan from Mexico. Maybe that's a way of smacking down NAFTA without even doing it.
That's a tax arbitrage. But that's, I don't know if that was considered in the whole NAFTA negotiation. That's just one of the effects of having now a lower tax rate.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.